Hey, this is Jeff Costello with Tribeca Northwest Real Estate. I am here today to introduce you to Miki Mobrand with Prime Lending. Prime Lending is one of the top 10 retail mortgage companies in the United States, and she runs one of the best offices. I think you're number 1 in the region and number 7 in the country. And we're here today just to find out a little bit more of what the consumer should be or should know as far as getting a mortgage. So I have a couple of questions, but welcome.
Thank you. Thanks for having me.
Awesome. So working with a lot of buyers and even sellers, I think it's really important for people to get pre-approved, so buyers. So why is it important for a buyer to be pre-approved?
That is a good question, and it comes up a lot, especially with real estate agents. They want to be shopping with buyers that are pre-approved because one is that you want to be shopping in a price point that you're actually qualified for. You don't want to be disappointed showing houses that that may be a little bit above your price point. The second is just being prepared. A lot of times people think, well, I'm not quite ready. I'm just kind of putting my toes in the water. And then maybe they stumble upon a home that they fall in love with. Well, if you're not pre-approved, you can't act as quickly. If you're pre-approved, you come in with a much stronger, verified, strong pre-approval and a much stronger offer to leverage. Do you agree with that?
Absolutely. And I think it's hard for buyers, and you'd said it in one of your first points, is if they go into a house that's outside of their budget and they fall in love with it, it's hard to take them into a home that is priced a lot less. So from my standpoint, I think it's important to be pre-approved just so that you know what you can afford. What I like is I want them to talk to you as the loan officer to really go through the details. And I don't necessarily know what those details are, but usually after they've spoken to you and they've got their pre-approval, they come back to me and they're more confident. So what's the process of getting pre-approved?
Yeah, so it's 3 basic things. We're going to look at credit, income, and assets. So credit, it's not just about having a good score. It's also, are you paying your bills on time, that sort of thing. So we look for things like that. Second is income. And when we look at income, we're also looking at your debts. So we're looking at, we're going to add that new monthly obligation and we're going to add that to your current debts. And then we're going to look at your debt to income. And then the third, of course, is your assets. So how much do you have put down? If you're doing a jumbo loan, do you have some reserves, things like that? We can, get creative. There's a lot of products out there. So sometimes if we need to stretch a little beyond what you think you can do, we can potentially do that. But that's generally what it is. It's kind of credit, income, assets. It's very, very easy and quick to do.
So speaking of credit, you did my refinance, a couple of them, and you helped me purchase credit scores. So if my credit score is not the highest it could be, right? Because I know there's different tiers of credit scores. You don't need much to have a good credit score, but a good credit score is different from a great credit score. But there's also a difference in what kind of rates I would pay as a consumer if I have good credit, but it's not great credit. Are there things that you can do to help me take my credit from being good to great just by looking at my credit report?
Sometimes, often, it might be a matter of just paying off debts or paying down debts. And it does matter. Credit score does matter. How much you're putting down matters. It does affect the cost of your mortgage. So every time we do a credit pull, we do what's called a what if simulator. And what it does is it gives us the tools and resources to quickly say, well, if I paid this credit card down to, zero or a few, $100, what does that do to my credit score? And quite often we can drive the score up and maybe get it into a better rate bucket. So we look at that on every single deal. Or maybe it's a longer term thing where we say, okay, maybe my credit's not ready yet. And we make a plan together. We say, okay, we can provide some advice, whether it's us doing the rescore or just getting them added to someone's credit card that does have some history and that does have a good credit established, and that can make a difference in 30 to 60 days. So there's creative ways that we can do to help. We're always going to look at how do we optimize the cost of this mortgage for this buyer, whether it's rate or down payment or that sort of thing.
So that brings up another good point. So if I have a buyer that's not credit qualified. They've got the income, they've got the assets. Or you're able to work with them to help them clean up credit.
Yes.
To, like you said, either pay some debts down. What if there's some like old collections or some just really old bad credit or derogatory credit? Are you able to help?
Yes, we can. We have some relationships with some credit repair companies. Sometimes it's a matter of helping get those removed. Sometimes you can call and kind of do the request yourself. The only thing that I would say is that, just being mindful of working with the right companies that aren't just charging you monthly, that sort of thing. Usually charging to remove an item is a better model. But we have those resources and vendors available. There's almost always ways to make a plan to repair your credit. And a lot of times it's daunting and people think, well, I'm not even close, but that is not necessarily the case. So it's always worth taking a look at, I would say. Mm-hmm.
So another question along those lines, because I've had some buyers that have been real resistant with like getting pre-approved because they're afraid that if their credit gets pulled too often, that affects their score. Can you shed some light on those concerns?
Yeah, that actually is one of the questions that comes up the most. And the reason it comes up the most is I think it's just kind of an education thing. When a lender pulls credit, yes, it's considered a hard pull. But number one is we have to pull credit because we have to pull credit to qualify. It only affects your score 2 to 3 points at most when you do a hard credit pull. It actually, although it stays on your credit report for, a couple of years, an inquiry stays on your credit report for a couple of years, it doesn't adversely affect your credit after 6 months. So even if it's showing on your credit report for 2 years, again, it's not affecting your score after a 6-month period. So A, it's okay to pull credit. B, it's good for 120 days. And typically when people are saying, well, okay, I'm not ready, I'm just kind of putting my feet in the water and I'm not ready to pull credit, all of a sudden they find the house they like and we're scrambling and, we got to do it anyway. Or the other example is if they are shopping rate. Maybe they think, okay, well, I don't want you to pull my credit because I'm not sure you're going to be the best rate for me and I want to shop, which is perfectly fine. What I always tell people is if you haven't already had your credit pulled, it's okay. Let me pull your credit, and I explain this to them. And then almost every lender, once you have your credit pulled, they're going to share what your credit score is, and you can certainly shop rate with other lenders. So,
well, that's a great segue into my next question is shopping for a loan. I know that there's a lot of options out there, whether it's with your bank or the many different online resources that are available. So tell me, what's the difference between working with a company like Prime and working with, going to my bank or my credit union? What would be the significant differences?
Yeah, that is another thing that comes up a lot just because, when somebody puts out there, like say on Zillow or does a search and they start putting it out there, they start getting bombarded by all these options. And they also have the internet to look at all these options. So it does get overwhelming. And so there are online options, there are banks, there are brokers, and there are direct lenders. I usually, aside from the online lender, not to dismiss that, but just to say be cautious. Online lenders tend to be more like a call center, and they may or may not know the local market. They may be advertising really great rates, but it could be a very risky, and is often very risky when you try to close a loan in a market you don't know, and if you delay closing, things like that. So I usually kind of break it down into 3 buckets. One is your bank. Banks, and there's kind of pros and cons to each of these. Banks sometimes come in with great rates. They're a client, they know you, maybe they have your information. Maybe you trust them because you walk into there every day and they know your name and that sort of thing. Banks have a little bit more conservative guidelines, meaning that if you don't fit their programs, then the loan may or may not work. So if you're in a transaction and something comes up and their program doesn't work, then you don't have other programs in which
it's just a yes or no.
Yeah, it's a yes or no. The second bucket is what's called a broker, and a broker basically they can shop your loan with a bunch of different investor resources. That's nice because you have variety and options. But what's a little difficult is sometimes they don't have control over it because they're not underwriting their files in-house. They're sending it out to each one, and who knows what their timelines are and that sort of thing. Okay. And then the third is a direct lender. You see that mostly in purchase markets. Realtors are going to refer a direct lender. And what a direct lender is we do all of our underwriting in-house. And
so you're a direct lender.
I'm a direct
not
lender,
a broker.
Not a broker. And people ask this question a lot. It's very confusing. Anyway, direct lender means that we sell directly to our investors. We do have a variety of programs, and we have control over the file. We also have the ability to make pricing decisions and pricing concessions if we need to and things like that. So the reason that I think that you see direct lenders being referred by realtors like you and I working together, and maybe you can chime in on this, but there's a lot of stakeholders in any home transaction. And it's not just about, if we're going to close the loan and make money. It's about, we have a reputation to uphold. We want to be consistent and reliable in these transactions. We want listing agents to continue to want to accept the offers of our buyers together. Mm-hmm. And so it's very, very important that we are closing on time, removing stress from our buyers along the way. It's a big deal. And then consistently communicating and, like I said, protecting their earnest money and all the things that are important.
I want to validate that because I've worked with all these different lenders, being a listing agent and a buyer's agent. To me, the big banks are really good at being big banks, and they have a small mortgage division. And like you had said, it's either a yes or a no. And a lot of times with those big banks, 2-3 weeks down the road, we find out that they don't like something and we've got to move that loan.
Right.
My experience with online lenders is it's an underwriter and it's a loan officer that is in Chicago or Atlanta. Mm-hmm. And, usually when it's a no for them, it's just boom and you don't hear from them and they'll just leave the buyer and the agent hanging. Mm-hmm. So I think it's really important to have a local relationship with a lender that knows this market and has a responsibility and is accountable not only to the buyer, the consumer, but to the agent, because obviously we want to continue our relationship together.
Yep. And I do understand wanting to get the best rate. We're always going to want to get the best cost mortgage. But this market, we're in a market with skinny margins. And for us to do any volume of business, we all kind of are hovering in the same place anyway. So there isn't going to be a big difference, big swing in rates typically.
Well, and I think it's important for the consumers to know that you and we're both consumers too.
Yes.
And when we shop, we're looking for the best deal.
For sure.
But I've realized over time, it's not always the best price, it's the best package.
Right.
And I know from rates are only, if they change at all, they're like an eighth, maybe. Yeah. If it was a half a point, I would understand. But there's more to it than just the rate, which is always competitive. Yes. It's about the ease and it's about the confidence to be able to close.
Right. And most people have questions to ask. It's for most people, it's going to be, if not one of the biggest financial transactions they'll do in their lives. And so it's important that they can reach you and talk to you and that we're providing useful information. There's only so much that's available online that's actually something that you can and you can't really bounce back and forth on that. So the interaction is really, really important.
And buyers need to understand that the seller needs to have confidence that the loan and the lender that you choose is the right one. And that's not only the seller's agent, and then your agent all have to have confidence in whoever that lender is. So, I feel like I can trust you. And that's important.
Yeah, and I actually think that is one of the most important points, because in a world where everything can be validated online and verified, the best thing we can do for our consumers, we're in a very, very smart and sophisticated buyer community, is to provide them with those tools and resources and give them information and show them where to find it, and educate, and provide tools so that they can, we're kind of working on this together. We're sharing information. We're not selling, we're sharing information. So
That's great.
Yeah.
So I think that pretty much covers what we're going to talk about today. Was there anything that I missed that I didn't ask that?
Well, the only thing I'd say, because I know I'm sitting here with, real estate agent that does a lot of business in the local community. And I think it's important that when you do vet out your professionals, I think making the point about us being in this business and doing a lot of business together is that doing a lot of business really helps you get better at your job. And so I think it is important having the ability to, people can look on Google, look at reviews, look at Yelp, look at, but get to know your professional, I guess is what I'm saying.
And I'll finish with this.
Yeah.
I was just at this event and they talked about there's over 1.3 million real estate professionals in the United States, yet only or less than 3% sell more than 2 homes a month. And why that's important to me is I think that I've got to sell more than 2 homes a month to stay sharp and to really understand and know the marketplace that we're in. And I would think the same would be for the loan officer, is to be engaged and to do, I'm not trying to say a lot of business, but the more business that you do, the sharper your skills are and your ability to get things done.
Right.
You agree with that?
I do agree with that. And also, when you do a lot of volume, you actually build a team. And when you have a team of professionals together that are doing a lot of business, you actually can share information. Not much can go wrong when you have a lot of smart eyeballs and people watching out for you. So I think that's a really important point to make.
Well, Miki, thank you so much for coming in and doing this quick video. Hey, if you have any questions about doing a mortgage, you need to do a refinance, or you want to purchase, I highly recommend Miki Mobrand with Prime Lending. And if you have any additional questions on buying a home or selling a home, please check us out at tribecanw.com.